Let's get some insights in the news shaping the markets. For that, we welcome in Peter Tuchman is with us, senior equity floor broker at Trade Moss. Thank you for being here. So I couldn't believe it with PCE. That's the Fed's favorite, and that comes in negative. Inflation falling in the U.S. for the first time since 2020. So how do you think the Fed feels now?
You know what? Look, I think their action. Look, this is, they run off of historic data, and they've obviously never had to deal with what we went through in the last couple of years, right? They've obviously, their approach has been so radical. 18 raises of 25 or more to a level of 5% and change in it. And all you can do is, I'm an evidentiary person. The evidence tells us that what he's doing is working in all respects, to the point where I think it's notable that in his last meeting this past week, he actually tossed out there the idea, even though we're not completely maybe done raising rates because that was not completely locked out in stone, but he did talk about Q2, Q3, where we may be cutting rates. So the job that he's doing works. The market is responding favorably. I think it's really important. I've been thinking about it for the last couple of weeks. Think about the year we've had, right? What a perfect opportunity. Thanks for having me on, because to look over the year we've had. We've had a major banking crisis. Mm-hmm. We've had 2 wars. We've had months and months, year and a half and change of interest rate raises. We've had every possible challenge into the marketplace, plus all the doomsdayers talking about recession. Yet the market here, a week before the end of 2023, and we are trading less than 1%. We are at record highs in the Dow. The Russell just went, in 46 days, went from a 52-week low to a 52-week high. That's never happened before. Right? That means that the breadth of the rally, look, as long as we see the fabulous 7 take the market up, which a lot of people say, oh, what's the big deal? It's a rally, 7 stocks are going up. But once you see the Russell start accelerating in that level, that means that it's a very wide breadth rally. Small cap, mid cap tech rallying significantly. So the market's telling us what it thinks of all that info.
Look, I know you can't give us exact numbers, but are you surprised to see many of the strategists with S&P targets next year for 5,000 plus on the S&P?
I'm not surprised. Because
does that seem doable to you?
I think, you know what, look, it's think about all the different, there are people still on the sidelines, there are people in cash, there are people who are short, there's this whole plethora, to use an SAT word, of people out there with such what's the word? They're so convinced about the negative impact of the market over the inflation and all that they're not buying into this yet. And so as we get to the point where we start lowering rates and we get through the new year and all that's going to be like a slingshot. That's my gut. I mean, there's a lot of money still to be put to work.
What about Santa Claus rally? I mean, let's just talk super near term. What do you think? Are we in it?
I think we're totally in it.
Did it start? I mean, we're 8th week of gains.
So, I mean, look, I
what about this next year and into the new year?
I've never really analyzed it, whether Santa shows up at the end of November or he's a mid-December guy. How long he's staying with us this year. It's been clear. Everyone said November would be bad. We had the best November we've had in years. December, well, now it's finally going to be bad. We have I think it's notable that this past Wednesday, we had a weird anomaly. We had this day that was like, not the rule, it was the exception to the rule. If you remember, if you were here. Right, so March, suddenly at 2 o'clock, the market rolled over aggressively. We sold off 80 handles. Now that was significant. So that was, and I've tried to analyze, that was either a margin call, that was either a massive option play, that was either some fund that was liquidating, whether it was redemptions. You don't know what it was. But if there are people way smarter than me who, if they're watching this market and they felt that we were in trouble, they would have sold this a long time ago. Every opportunity, any pullback in this market we've seen has been rebuffed with a rally.
Yeah, there's been a lot of sort of questions as to why a day like that happened. And one of the things I had heard was that with the selling, more selling, and then the algos kick in and you hit certain lines and you sell. The difference was those buyers that had all that cash on the sidelines and they just didn't step in.
They did not step in.
And where are they And that's the question.
Okay.
Where are they? Maybe
Okay.
are they just away for Christmas? They're done. They're sold. They're finished. Why didn't they step in when you talk about 80 handles? If you liked it before, you really like it when it's down big time, right?
I agree with you. It was an anomaly. Okay, they could be in St. Bart's on vacation. We do know that at the end of October, mutual funds shut down. At the end of November, hedge funds shut down.
Right.
And so we're left sort of in the corridor here in December. So the market may have these odd anomalies, and it's surely not the rule, it's the exception to the rule.
Right.
Where were they? I don't know. If I was a buyer and I was sitting on some cash and that happened and I was not able to identify why it was happening, I would once again sit on the sidelines. I rather in this market, and I see it with my customers, I rather buy into a rally than try to catch a falling knife, right? Because this whole amazing building that we're in and this market, which is just so robust, and the consumer in good shape and all that, can literally be turned around on a dime. We know that, right? One bad piece of news, one more war, one more crisis, if it gets some traction, can disrupt this whole market. We know that.
Right.
So I think the buyers are they're just being responsible. They're looking at the whole story.
Finally, a piece of advice to somebody who wants to put some money to work and say, hey, I'm interested in this market. What should I do? Is it stocks? Is it bonds? Is it both? Is it certain sectors? What do you tell them for 2024?
Okay, look, in a market that we've seen over the last couple of years goes up and down thousands of points. The moves we see in intraday used to take generations to happen. So I kind of tell people there's no bad time to buy a market. There's a bad entry point into the market. That don't sit around and wait for some event to happen to get in. Just get in and start small.
Right.
Stocks are a wonderful place. There's a lot of new people are trading futures these days if you're a trader. But if you're an investor, there's some very attractive equities in here. I mean, I'm really surprised by Nike. And what we're also seeing is an overreaction. When they love a stock, they love it with all abandon. But when they don't like it, like we're seeing last night with Nike, I was there watching the earnings. We were doing a Q&A about markets yesterday, and the expected move in Nike yesterday was down 7 or up 7, depending on the earnings. It was trading down 16. Well, that's significant. Nike's a real stock.
Yeah.
So whatever you're seeing is trading in an exaggerated fashion.
Yeah.
So.
Yeah. But overall, it sounds like you're more positive.
I definitely am more positive.
Okay.
Yeah.
Peter
You got to be
Tuchman
positive.
of Trade Moss. Great to see you. Thank you so much. Appreciate it.